This is the S&P 500. In this video, we're going to consider a 20% crash on the S&P 500. We're going to consider in this video that things are about to get much worse than they already have before things get better. And we're going to talk about how this ties into Bitcoin and why actually, and this might be an unpopular opinion, Bitcoin data on the charts right now lining up so well with this story. There is room and leniency in technical analysis data that we're going to look at that just sets this move up, and it would not be a surprise to me if it happens. So let's talk about this in the video. This is an article, and here's the headline. Very, very serious. JP Morgan CEO issues a stark panic warning that could hit the price of Bitcoin. Now, I know Jamie Dimon, not popular in crypto. He's been very wrong about Bitcoin, but I want to take his words and I want to consider them. I want to hypothesize. If he is correct in what he's saying or what he's potentially worried about, I want to put that on the chart so that we can be prepared for it. These are very, very serious things, which I think are likely to push the US and the world. I mean, Europe is already in recession, and they're likely to put the US in some kind of recession 6 to 9 months from now. So 6 to 9 months from now, this isn't like, hey, next week we're finally going to rip that Band-Aid off and we're going to really get through this. We'll find the bottom. This is months and months and months of volatility in the making. This is months of unknown in the making. The next 20% would be much more painful than the first, Dimon said. Earlier this year, Dimon warned he was preparing JP Morgan for what he called an economic hurricane. So he's talking about 20%, this 20% move potentially in play for S&P 500. First things first, I just want to say on that chart alone, from the March 2020 swing low to this all-time high, you can actually see a move like that would be a great long-term macro consolidation for S&P 500, falling right into this higher low Fibonacci pullback area, just above this 786, right around 2750. A 20% move would be around 2875 or so. So you can see this would be a very actually just kind of in the macro normal type of move for markets, because we get these often, right? And when I say often, this is decades of data, but they happen because they need to happen, these cooling off phases. So now we're going to look at what this potentially could look like on the Bitcoin chart. So, and real quick for context, everybody, as I do this video, tomorrow CPI data is coming out. So in the short term, this news is going to probably add some volatility to this story in the short term, right? Maybe the data is not as bad as people are anticipating, and we get a move to the upside. That doesn't take away from what we're talking about here, the macro look, the potential for a fall. Dimon thinks the Fed, which has raised interest rates by 0.75 points at its last 3 meetings, waited too long and did too little as inflation ramped up to a 40-year high. And from here, let's all wish Fed Chair Jerome Powell success and keep our fingers crossed that they manage to slow down the economy enough so that whatever it is mild. And it is possible, he said. So he's introducing the not hopium, but the possibility that things don't get this bad. But let's go to this chart. If things do get this bad, if we get this 20% move, it's not going to be overnight. What does it look like for Bitcoin? Here's Bitcoin on the daily. We know what's happening on the daily chart. We know the setup is there for a continued move to the downside. This yellow line is a big piece of context for this video, and I know I've been talking about that 786 line a lot lately, this Fibonacci on the macro, but I'm going to dig deeper than just that data in this video, and we're going to look at it right now. So here's the weekly chart. There's our 786 line. It's this macro Fibonacci pullback area. First things first, if S&P 500 is going to crash another 20%, well, this sets up the move for Bitcoin to finally fall below the 786 line. This is something we've just been anticipating. It hasn't happened yet in this bear market. And this is something that has happened in the last bear market. And it's something that happened in the 2015 bear market here. You see these yellow lines? Those are the macro 786 lines. So that's a move we've been waiting for. So S&P 500, number one, falling below or just falling below 200-week moving average, 20% crash. That's the first thing. But now here's where things really start coming together very interestingly from a data perspective on this chart. If we're looking at Bitcoin zoomed out on the weekly, I want to start opening up the momentum oscillators. The momentum oscillators paired with the charts and the price data alone, that's where things become more clear. and more apparent of the story that's happening and truly the momentum of Bitcoin. So what I think hopium enthusiasts are looking for is something like this. This move right here, this swing low capitulation was the bottom, right? Many people might say that. Very similar to what happened in this capitulation in 2018, hitting the 200-week moving average. And then you can even see some consolidation very similar to what we've been getting, right? So the hopium enthusiast would say, hey, that's what's happening right now. We're getting ready actually to exit the bear market, just like we did back then. Well, again, that's just price data alone. That's just charting data alone. In all of the videos that we do and all the technical analysis we do, we pull other factors, right? So macroeconomic data is one thing, but then we pull other indicators and tools that we use on the charts. And a big piece of that is momentum. So now let's line up this story that hopium enthusiasts might be using, and let's take some additional data. So RSI right off the bat is like, wow, even the RSI is seemingly the same as 2018. We got this swing low, and then we just start getting this upward momentum, right? So swing low, now we're in this kind of consolidation, a little bit of upward momentum. You can even just see a higher low. But let's start taking more momentum data because that's not enough. And let's go over here and let's go to the stock RSI, a quicker moving momentum oscillator. And this on the weekly is probably the best chart to use, the quicker moving momentum oscillator, the stock RSI. This can give us an idea of how much strength Bitcoin is kind of having at this very given moment on the macro chart. And here's what we're looking at. Right now, you can see Bitcoin kind of, it did get this burst of momentum on the stock RSI coming back from this low in July. And it's just been consolidating up here towards overbought territory. And you can just see while that's happening, price really not getting just this nice burst to the upside. So now we take that data point and we go back and we say, okay, well, what was Bitcoin doing when Bitcoin was breaking out of this swing low back here that hopium enthusiasts, and I keep saying that, are hoping we get again, right? Bitcoin's breaking the 20-week moving average, and Bitcoin was kind of exploding on the stock RSI into overbought, right? Right now, Bitcoin is kind of in this territory where it's just kind of fizzled out, very similar to what happened right here towards the end of this pump out of the bear market, right? And Bitcoin at that time made moves through the 20-day moving average, the 20-week moving average, the 50-week moving average, and just exploded to the upside before stalling out. Now, interesting to note, to bring all of this together, we use the MACD. So we go to the MACD with another momentum oscillator, and we look at this MACD line crossing the signal line, that blue line down here, and it's actually behind me, the blue line crossing that red line, the signal line, that was around 63 days ago or so. And so if we look at 63 days ago, you can see Bitcoin, kind of in the middle of all this consolidation. So kind of actually right around here, that's happening, right? So the bottom of this range, Bitcoin's consolidating. That's when that happened, the MACD crossing. But now let's go back and let's look at when the MACD crossed back here. So, and we measure 63 days from when it crossed, right? So here's the bullish cross back in the last bear market, MACD crossing the signal line. 63 days later, we're looking at around, the middle of April 2019. So let's open up the chart. 63 days later, very similar to the 63 days later from this recent MACD cross that we just got. And let's look 63 days later. What was Bitcoin doing? Well, Bitcoin was in mid-April right here, already testing the 50-week moving average. Bitcoin had exploded out of the bear market bottom, and all of this had happened at that time. This time, Bitcoin not seeing that momentum, not seeing that buying pressure, not seeing that strength. So yeah, the consolidations look the same, but is the strength there? And that's the kind of thing we always need to ask ourselves. We need to ask ourselves, well, price movement similar, but is the strength the same? Is the environment that we're trading within the same, even the macroeconomic environment? Answer today, no, it's not. So the case for Bitcoin to fall kind of starts coming together because number one, we haven't fallen below the 786 macro line. And then number two, if you go and you look at those momentum oscillators, you can just see Bitcoin is very much just has lost strength comparative to what it was doing back here. And really another point to illustrate that, if I open up the MACD once more, check this out. At that swing high that Bitcoin was getting, and let me just show this to you on the chart. At this swing high right here that Bitcoin got after just finally exiting, the move that we'd all like to see, you can see on the MACD, the histogram was topping out and starting to cool off, right? And right now, the histogram on Bitcoin is kind of already seen that momentum above zero on the histogram. It's already happened. When it happened back here, price was actually moving up and breaking out of the bear market. When it's happening here, Bitcoin price is not breaking up. It's not exiting the bear market. It hasn't happened. So I'm not saying it won't happen. I could be very wrong in saying that I think that we're going to see another low for Bitcoin in this Bitcoin bear market. I could be very wrong. Don't take this as financial advice. Take this as data. But I'm the type of person, as a macro investor, if we're in a bear market, I want to anticipate bear market moves. I just think it's safer. I have a cooler head. I'm mentally in the game when I'm doing that. Now, we can note, like on the daily chart, we could get a breakup. Maybe again, we get good data tomorrow. It's just more positive than expected. We could get this breakout to the upside, right? And then you start seeing headlines like this. We have $25,000 or $15,000 Bitcoin. You know, what is in play? And $25,000 really is in play. We get a breakout out of this triangle, kind of move into the 200-day moving average, maybe resistance, and then we anticipate potential throwback, right? And then $15,000 obviously also in play. If Bitcoin breaks out of this triangle, you know, we have that target, and we have a target for multiple reasons in that $12,000 range for Bitcoin. And again, referencing that article that we started with, this could be really months in the making, right? Jamie Dimon saying 6 to 9 months from now, basically, where US is pushed into this recession. So everybody, at the end of the day, nobody does know. I just really wanted to share that data with you. I think it's very powerful data, useful data. At least it helps me in terms of anticipating what a move to the downside might look like and why it is so possible if you just look at the charts. Not trying to spread fear out there. I know some people think that, but this is just the state of the market. Want to be prepared as all of this is kind of coming together. So I appreciate you. Hit the subscribe, hit the like. I'll see you in the next video. God bless.